We're going to cover the rules now for the trading of the South African Top 40 Index. So as you'll see here, we've got 7 candles between the 2 blue dots. We've got the first 6 candles, which are for the period called the auction, prior to the market opening. And then the candle on the far right, the little red doji type, is the market opening. So what we're going to do is simply just look at those 7 candles, and we're going to find the high and the low of that period. Now that we have found the high and the low of those 7 candle channel, we're just going to draw in horizontal lines touching the high and then the low. Okay, so now we are looking at 9:05 that we have this channel drawn to quickly determine our entry levels. Now we're going to want to go long if the price breaks above the channel line, the high channel line, and we would want to go short if the price were to break below the bottom channel line. So what we're going to do now is place an OCO order, a one cancels other order. So we're going to place a buy order to go above, if the price goes above the top channel line, with a stop loss at the bottom channel line, at the bottom of that channel. And then we'll place a short order if the price breaks the bottom channel line, with the respective stop loss at the top channel line. We would place those, whichever order gets triggered first, the other order would then be automatically cancelled. And then we will wait for that order to be triggered to determine the target. Okay, so just a few minutes after we've placed our orders, you can see on the next green candle that the price has broken up above that channel high, so we would now be entered into a long position with a stop loss at the bottom channel, and our short order would now have been cancelled out of the market. I'm just going to quickly cover stop loss now. If we're looking at the high and low channel, we have a pale blue box to the left with the number 174 in blue just above. Now that is the number of points between the high and the low of that channel. So when we're placing an order, we will obviously have that number available to us to determine our trading size. Now if you're trading this on a platform like RG, CMC, etc., you can trade at spread betting or CFDs, for example. If you're trading it direct to market with futures, it'll just depend on how many contracts you're able to enter. It'll be in multiples of 10 Rand per contract. So let's say you're trading with CMC or RG, for example, and you're going to take your capital that you have available, you're going to times it by your risk percentage that you're willing to risk per trade. So let's just say it's 2%, and you're going to divide that risk amount that you're willing to risk on one specific trade by 174 points. That will give you then how many rands or pounds or dollars you are willing to risk per point on this open trade. And if you times that by the 174, that would give you your total risk that you're willing to trade at per one trade. So, for example, if you have, let's say, 100,000 Rand account, and you are willing to trade at 2% risk per trade, you would then be risking 2,000 Rand per trade. Divide that by the amount of points in the channel, which is 174. We'll round it up to 175. comes out at 11 Rand 40. So we would either trade one contract if you're going direct to market at 10 Rand, or you could trade 11 Rand on, say, a market broker such as CMC or RG. So let's just say you're trading at 11 Rand per point. We're now going to be looking at targets. We are looking at least 1.5, but ideally 2 to 1 risk. So if we're looking at 174 points of risk, we're looking to get at least 260 points, but ideally 350 points. So as you can see at the top pale blue bar, the price did actually hit about 351 points. Now if we look just to the right of that pale blue bar where the price started to consolidate for a while, our original target of 1.5 times our risk would have been just above that. Now in all honesty, we would have probably hit the 1.5 risk, because just shortly after that the price did jump through that level quite quickly. And in reality, we're not actually going to be able to adjust our target level in time unless you're actually physically watching the market live. So in this case, yes, if we were watching the market live, we probably could have gotten our full 340 points. If we had set the order, set our targets and walked away from the screen, we would have probably captured the 1.5 risk to reward, capturing that 260 odd points.